Yes, a very good afternoon. Right, so we've completed up to series 1 to 4, right? Now coming to the series 5 for the correct and the MCQ, right? In which we will be discussing the RTP May 2019, right? So very interesting multiple choice questions over there, right? So now let's come into the correct and the multiple choice questions in the RTP May 2019, okay? Right. Is Marvin Limited is a renowned food supplier in a posh area providing restaurant facility along with food delivering. Okay. CA Felix was appointed as an auditor of the company for financial year 17-18. While examining the books of account of the company, CA Felix came to know about one of the major expenses of the company, that is rent expense of rupees 1,20,000 per month, for which he applied substantive analytical procedure for verification purpose. And 1,20,000 rupees per month. Explain how would CA Felix perform substantive analytical procedures in the given scenario, right, for the rent expenditure. CA Felix would inspect every single rent invoice per month of rupees 1,20,000 and verify other elements appropriately. Then that would be detailed checking. That would not have been substantive analytical procedure. If you inspect every single rent invoice per month of 1,20,000. Right. CA Felix would compare the rental expense of the company with that of another nearby company having corresponding dimensions for high degree of accuracy. So you're comparing with similar industry information for rent expenditure, not really a very good idea over there. Right. Then D over there says A and B both. But anyways, A to we have highly rejected because we say that is detailed checking. That is not the analytical checking. Right. So looks like C should be the answer, but let us read it once. Right, CA Felix would select the first month rent invoice of 1,20,000 and appropriately verifying other elements would predict that, yes, wonderful, develop an expectation, predict that the rent for the whole year would be 14,40,000 and therefore he would compare with the actuals with his prediction and follow up for any fluctuation. Right, this seems to be perfect. Then develop an expectation, you know the rent per month, check the invoice for that 1 month, then develop an expectation for 12 months and then compare with the actual and follow up for any fluctuation. Okay, next one. Coyote Limited is dealing and trading of electronic goods. Huge inventory, 60% approximately of the company is lying on consignment under the custody of the third party. Right, so they are talking about a situation where inventory is lying with the third party. Right, SA 501, audit evidence specific consideration for selected items. The first selected item over there is the existence and condition of inventory. And one inventory of the client which is with the client, and second inventory of the client which is with the third party. Okay, C star, the auditor of the company wants to obtain sufficient appropriate audit evidence regarding the existence and condition of the inventory lying on consignment. Thus, he requested and obtained confirmation from the third party as to the quantities and condition of inventory held on behalf of the entity. Right, so that's the first procedure told in SA 501 also. Okay, for inventory lying with third party, you obtain the confirmation from the third party. Right. However, it raised doubts about the integrity and objectivity of the third party. Which of the following other audit procedures may be performed by CA star to obtain sufficient appropriate audit evidence regarding the existence and condition of the inventory under the custody of the third party? Right, so attend third party's physical counting of inventory. So you go and attend the count. Arrange for another auditor to attend third party's physical counting of inventory. Inspect the warehouse receipts regarding inventory lying with the held by the third parties. All of the above. Right, so these are all the procedures which are laid down in SA 501. Right, so one, you can obtain a confirmation from the third party. If not in confirmation, you can perform the other audit procedures. And what are the other audit procedures which could be performed? Attend third party physical inventory count. Right, arrange for another auditor. Inspect the documentation like the warehouse receipts or so. Right, so the correct option over here should be D. That is all of the above. Right, all of the above. Next one. In July 2018, Messrs. Tom and Company entered into an agreement with Messrs. Jerry and Company, under which a machinery would be let on hire and Jerry and Company would have the option to purchase the machinery in accordance with the terms of the agreement. Thus, Jerry and Company agreed to pay Tom and Company a settled amount in periodic installments. The property in the goods shall be passed to Jerry and company on the payment of last of such installments. While checking such hire purchase transaction, what would the auditor examine? Right, so Tom and Jerry, Tom is the hire purchase company and Jerry is the hire purchasee. Right, so goods have been given on hire purchase, agreed to pay the amount, and the property in the goods will be transferred on the payment of the last installment. While checking such hire purchase transaction, what would the auditor examine? Right, that the periodic installments paid are charged as an expenditure by Jerry and company. Why? Because it is a hire purchase transaction. It is not a finance lease over here. Right, so periodic installments paid are charged as an expenditure by Jerry and company. Okay. Right, that the hire purchase agreement specifies clearly the hire purchase price of the machinery to which the agreement relates, or rather than the hire purchase price, should it be the cash price, right, of the machinery to which the agreement relates. Okay, but let us see the other points. But point number 1, we are sure, okay, we are going to check this one. Right, that the periodic installments, what does it say? Which of the following, right, while checking such hire purchase transaction, what would the auditor examine? Right, what would the auditor examine? That periodic installments paid are charged as an expenditure by Jerry and company. Right, so the periodic installments paid, right, by the Jerry and company, have they been charged as an expenditure? That the hire purchase agreement, I think this is the most important document the auditor needs to verify for a hire purchase transaction. Right, the hire purchase transaction, you need to verify the hire purchase agreement. Specifies clearly the hire purchase price of the machinery to which the agreement relates, and also the cash price of the machinery. Right, both prices are required to be mentioned. Right, you calculate those amounts over there. That Messrs. Tom and company charges depreciation throughout the life of the machinery. Right, so Messrs. Tom and company charges depreciation throughout the life of the machinery, and all of the above. Right, so now when you're checking regarding this expenditure, it is in the books of Jerry and company. When you're checking about the depreciation, that is in the books of Tom and company. But mainly in the context of the hire purchase transaction, what would the auditor require to examine for the hire purchase transaction is the hire purchase agreement. Right, that the hire purchase agreement specifies clearly the hire purchase price of the machinery to which the agreement relates. Right, so most important point over there. Right, so B is the correct option. That auditor, you need to verify the hire purchase agreement to check the hire purchase price of the machinery to which the agreement relates. Right, next one, question number 4. The management of Magoo Limited has developed a strong internal control in its accounting system in such a way that a work of one person is reviewed by another. Since no individual employee is allowed to handle a task alone from the beginning to the end, the chances of early detection of frauds and errors are high. CA Olive has been appointed as the auditor of the company for current financial year 17-18. Before starting the audit, she wants to evaluate the internal control system of Magoo Limited. To facilitate the accumulation of the information necessary for the proper review and evaluation of internal control, CA Olive decided to use internal control questionnaire to know and assimilate the system and evaluate the same. Which of the following question need not be framed? Oh, negative question. Which of the following question need not be framed under the internal control questionnaire related to purchases? It need not be framed related to purchases. And a question need not be framed in the internal control questionnaire related to purchases. So are authorized signatories for purchases limited to elected officials? So that certainly we need to check the authorization power. Are payments approved only on original invoices? Right, so we also need to check whether the payment being made is against the original invoices. Does authorized officials thoroughly review the documents before signing the check? Right, so again the review of the documents important before signing the check. Right, so left is only the last one. Right, are monthly bank reconciliations implemented for each and every bank account of the company? Now, why bank reconciliation for each and every bank account of the company will come in purchases? And so this question is not required to be included. And it need not be framed under internal control questionnaire related to the purchases. Right, next one, question number 5. CA Bobby is a recently qualified chartered accountant. He is appointed as an auditor of Droopy Limited for the current financial year 17-18. He is quite conservative in nature, which is also replicated in his professional work. Right, CA Bobby is of the view that he shall record all the matters related to audit, audit procedures to be performed, audit evidence obtained and conclusions reached. Rather, that's the definition of audit documentation. A record of audit procedures performed, audit evidence obtained and conclusions reached. Thus, he maintained a file and recorded each and every of his findings during the audit. His audit file, besides other things, includes audit program, notes reflecting preliminary thinking, letters of confirmation, email concerning significant matters, etc. State which of the following need not be included in the audit documentation, right? So again, a negative question. Which of the following need not be included in the audit documentation? Right, so audit program pakka, it should be there in the audit documentation. Notes reflecting preliminary thinking, let us think about it. Letters of confirmation, the confirmation return received from debtor, creditor, banker, that we have to put it in the audit file. Email concerning significant matters, right? So all significant matters, emails which you've received from management, TCWG, you have to keep it in your audit file. Right, so least priority over here would be the notes reflecting the preliminary thinking, right? So that would be the correct option over there. Right, so I told you, either you should know the one correct option or you should know the three wrong options. Any one will do. Either you should know the one correct one or you should know the three wrong ones. Right, so notes reflecting preliminary thinking did not be included in the audit documentation. Wonderful. While auditing the books of account of QHMP Limited, CA Ranker, the statutory auditor of the company, came to know that the management of the company has recognized internally generated goodwill as a fixed asset. Internally generated goodwill, can it be recognized as a fixed asset? No. CA Ranker discussed with the management that according to the accounting standard, internally generated goodwill is not recognized as an asset. So the Ranker has good knowledge because it is not an identifiable resource controlled by the entity that can be measured reliably at cost. However, the management is quite rigid to the accounting treatment followed for internally generated goodwill and are not paying attention to the auditor. Thus, through an example, CA Ranker explained which type of goodwill may be recognized as a fixed asset for which the management got justified. State which of the following example the auditor must have given to the management. Oh, such a nice question drafted over there. And which of the following example the auditor must have given to the management. So first they were not agreeing, then the Ranker gave the example, then they agreed. So what example did the Ranker give? Okay, if an item meeting the definition of an intangible asset is acquired in a business combination, it forms part of the goodwill to be recognized at the date of the amalgamation. And so any business, any acquisition of any business, in that course if goodwill arises, it says that can be recognized as an asset, intangible asset. Okay, only those goodwill needs to be recognized as a fixed asset which can be touched like physical asset, for example, land and building. How is that possible? How can it ever be possible that you can touch goodwill over there? Right, touch goodwill like physical assets. So this is not, should not be, Ranker should not have told this sentence over there. Goodwill is recognized only when there is a contractual or other legal right for a physical asset which shall not be amortized over the period. No physical asset, and no that there won't be any amortization or so. Right, and all of the above. Right, but the first sentence seems to be making sense over here. If an item meeting the definition of an intangible asset is acquired in a business combination, it forms part of the goodwill to be recognized at the date of the amalgamation. Right, so internally generated goodwill not allowed, but goodwill arising on account of some business combination, that can be recognized as an intangible asset in the balance sheet. Okay, right, so A is the correct option. Next one, question number 7. Eor Private Limited is incorporated on 1st July 2017. During the financial year 2018, the company did not opt for any borrowing at any point of time and have a total revenue of 60 lakh. At the year end, it provides the following information regarding its paid up capital and reserves and surplus. Right, so Eor Private Limited, borrowing 0, revenue only 60 lakh, and paid up share capital and reserves and surplus as follows. Right, paid up capital, consideration received in cash for equity shares including unpaid calls of 5 lakh, 40 lakh. Consideration received in cash for preference shares 25 lakh. Bonus shares allotted 7 lakh. Share application money received pending allotment 10 lakh. Right, so that is 82 lakh. Right, reserves and surplus, balance in profit and loss account 15 lakh, capital reserve 10 lakh, subtotal 25, grand total 1 crore 7 lakh. You are provided with the provisions regarding applicability of CARO issued under 143(11) to a private limited company, that it specifically exempts a private limited company having paid up capital and reserves and surplus not more than 1 crore, yes, as on the balance sheet date, and which does not have total borrowings exceeding 1 crore from any bank or financial institution at any point of time during the financial year, and which does not have a total revenue as disclosed in Schedule 3 exceeding 10 crore during the financial year. Right, so they have given the applicability of CARO also for the private limited company over there. Right, considering the information given above, which of the following shall be considered as a reason regarding the applicability or the non-applicability of CARO 2016, also CARO 2020, same applicability provision. Right, so applicability or non-applicability. Right, so one, if we take the figure given in the question as it is, 1 crore 7 lakh, then we will have to go for the A option over there. Reporting under CARO shall be applicable as the company is having paid up share capital and reserves and surplus of 1.07 crore, that is more than 1 crore as on the balance sheet date. And what are the other options? 1.07, 1.02, 0.92 and 0.82. But let us check over there what all they have included in their paid up share capital and reserves and surplus. 1 crore 7 lakh consideration received in cash for equity shares, including unpaid calls of 5 lakh. This unpaid calls of 5 lakh, we need to reduce it. Right. Then second one, consideration for preference shares include, bonus shares include. Share application money received pending allotment should not be considered while calculating the paid up share capital and reserves and surplus for the purpose of CARO. Right, and then balance in profit and loss account, okay. Capital reserves, okay. Right, so now 1 crore 7 lakh minus 5 lakh and minus 10 lakh, right? So that brings it to 92 lakh, that is 0.92 crore, and therefore we will go with the option C. Right, reporting under CARO shall not be applicable as the company is having the paid up share capital and reserves and surplus of 0.92 crore, that is not more than rupees 1 crore as on the balance sheet date. Right, so very important over here, you should be knowing the applicability of CARO and what all is to be applicability of CARO, so rather given in the question, but you should be knowing regarding what is included and what is not included while calculating that paid up share capital and reserves and surplus. And so unpaid calls you need to reduce, and also the share application money received pending allotment you need to reduce. Okay, wonderful. Right, let's come to question number 8. See, Goofy has been appointed as an auditor for audit of a complete set of financial statements of DP Limited. My God, what names they thought of. See, Goofy appointed as an auditor of DP, a listed company. The financial statements of the company are prepared by the management in accordance with the accounting standards prescribed under section 133 of the Companies Act 2013. Right? Everybody pay attention. However, the inventories are misstated, which is deemed to be material but not pervasive to the financial statements. So, inventories are misstated but material but not pervasive. It will lead to a qualified opinion. Is it right? And a material misstatement, material but not pervasive, it will lead to a qualified opinion. Based on the audit evidences obtained, CA Goofy has concluded that a material uncertainty does not exist related to events or conditions that may cast a significant doubt on the entity's ability to continue as a going concern in accordance with SA 570. Right? So, going concern also, there is no material uncertainty. Further, CA Goofy is also aware of the fact that a qualified opinion would be appropriate due to a material misstatement of the financial statements, and that inventory is misstated. Right. State, what phrases should the auditor use when drafting such an opinion paragraph? Such a nice question they've drafted over there. Right. So, how will you draft the opinion paragraph now in case of a qualified opinion? Right, in our opinion and to the best of our information and according to the explanation given to us, except for the effect of the matters described in the basis for qualified opinion section of our report, the aforesaid financial statements present fairly in all material respects or give a true and fair view in conformity with the AFRF. Right, so what wording they've used over there? Except for the effect of the matters described. Seems okay, but let us see the other options. In our opinion and to the best of our information and according to the explanation given to us, with the foregoing explanation, ye kahan se laya? From where have they got this? The foregoing explanation, the aforesaid financial statements present fairly in all material respects or give a true and fair view in conformity with the AFRF. No, there is no such terms used over there as called as with the foregoing explanation. Then, in our opinion and to the best of our information and according to the explanation given to us, subject to the misstatement regarding inventories, right? So, inventory ka misstatement they've mentioned here, no giving reference to the basis for qualified opinion section. The aforesaid financial statements present fairly or give a true and fair view. And so, subject to inventory, not writing in the opinion paragraph itself. So, again, not done. Next one. In our opinion and according and to the best of our information and according to the explanation given to us, with the explanation described in the basis for qualified opinion section, right, the aforesaid financial statements present fairly or give a true and fair view. So with the explanation described, no, there is no explanation over there. There is a qualification over there. Subject to the misstatement regarding inventory, they have not given a reference to the basis for qualified opinion section of the report. With the foregoing explanation, right, so the correct option over there is going to be A. Right, in our opinion and to the best of our information and according to the explanation given to us, except for the effect of the matters described in the basis for qualified opinion section of our report, the aforesaid financial statements present fairly in all material respects or give a true and fair view in conformity with the AFRF. Right, coming to the next one, right, question number 9. While auditing the accounts of Thought Company Limited, CA Bliss, the auditor of the company, came across certain account payable balances for which direct confirmation procedure needs to be applied. For creditors, the direct confirmation procedure needs to be applied. Thus, for 2018, he sent positive confirmation requests. So, whether confirming party agrees or disagrees, in both cases it needs to reply. He sent positive confirmation request wherein the trade payables are requested to respond whether or not they are in agreement with the balance shown. The auditor received all the confirmation replies from the trade payables on time as correct except for 5 of them. Right? So all replied except for 5 of them. What other option the auditor is left with regard to the trade payable for which no reply for the confirmation request has been received? And so main audit procedure, so all of them have replied except 5. So now for this 5, what is the other audit procedure? What is the option left with the auditor with regard to the trade payable for which no reply for the confirmation request has been received? Okay. Perform additional testing which may include agreeing the balances to subsequent cash paid. Right? So subsequently cash would have been paid. Accept the balance as it is assuming other replies against received confirmation request being correct. So it says just accept it. Right. Accept the balances as it is, assuming that trade payables must have replied in case of any discrepancy. So had they had discrepancy, they would have replied. And for the fact that they have not replied, there is no discrepancy. So boss, you can't assume anything like this on your own, no? Right, so none of the above, no, right? What you is the correct one over there. Perform additional testing. And a main procedure, if not main, alternative. If not alternative, then 705. Right, so perform additional testing which may include agree the balances to the subsequent cash paid. Right, and the last one over there. CA Daffy is the auditor of X-Bose Limited for previous 2 years. However, due to certain unavoidable circumstances, no AGM was held for the current financial year 2018 within every possible time limit, and thus the ratification procedure for the appointment of the auditor could not be performed. Whether she may continue to hold the office of the auditor. They say the AGM could not be held, so that is why ratification of appointment of auditor could not be done. So now what? CA Daffy may continue to hold the office of the auditor for current financial year only and thereafter shall resign herself as the ratification procedure could not be completed. Then CA Daffy should continue to hold the office of the auditor and ask the board to reappoint her in a private meeting. Oh my God. Not even board meeting, in a private meeting. CA Daffy should continue to hold the office of the auditor as no such ratification provision for appointment by members at every AGM exists. Ye barabar hai. Right? There is no concept of of ratification required at every AGM. Originally, when Companies Act 2013 was drafted, for a little time they had put over there this ratification ka requirement. Now it was done away with. And then it was done away with. Right. So CA-DAFI should continue to hold the office of the auditor, as no such ratification provision for appointment or by members at every AGM exists, and CA-DAFI should not continue to hold the office of the auditor as the ratification procedure could not be completed. And then now that is done away with. Okay, right, so these are the 10 multiple choice questions which we have over there, right? Good ones, like these are, big questions over there, more of thinking involved rather than the direct simple questions. Okay, right, so as we see more and more, we get to see more variety over there. Right, now let us look into the true or false, or the correct and correct. The preparation of financial statements does not involve judgment by management in applying the requirements of the entity's AFRF to the facts and circumstances of the entity. It says application of AFRF in the preparation of financial statements by the management does not involve any judgment by the management. Rather, it involves a significant amount of judgment by the management. Rather, that is one of our inherent limitation of an audit also, the nature of financial reporting. And in our inherent limitations of audit, what we have, nature of financial reporting, nature of audit procedures, right? Then the other factors affecting the limitations of an audit and the timeliness of financial reporting and the balance between benefit and cost. Right, so nature of financial reporting, and there is a huge amount of judgment which is involved from the management side also in the preparation of the financial statements. Right, so incorrect. The preparation of financial statements involves judgment. What does the question say? Right, does not involve judgment. What we are saying, it involves judgment by the management in applying the requirements of the entity's AFRF to the facts and circumstances of the entity. In addition, many financial statement items involve subjective decisions or assessment or a degree of uncertainty. Like, mainly when it comes to the estimates, and whether provision, whether contingent liability, how much should be the amount. Right, so it involves subjective decisions or assessment or a degree of uncertainty, and there may be a range of acceptable interpretations or judgments that may be made, right? So management may also have to make some assumptions over there, some interpretations over there. Okay, right, so incorrect. Coming to the second one, audit procedures used to gather audit evidence may be effective for detecting an intentional misstatement. And so intentional misstatement is nothing but a fraud. Right, so audit procedures which are effective in gathering the audit evidence, will they also be effective in detecting a fraud? No. Why no? Because fraud may involve, this is a very favorite sentence which you need to know regarding this fraud. Fraud may involve sophisticated and carefully organized schemes designed to conceal it, such as forgery, deliberate failure to record transaction, intentional misrepresentations to the auditor. Right, fraud may involve sophisticated and carefully organized schemes designed to conceal it. What I told you, such as forgery, deliberate failure to record transaction, intentional misrepresentations to the auditor. Thus, audit procedures used to gather audit evidence may be ineffective for detecting an intentional misstatement that involves, for example, collusion to falsify documentation, which may cause the auditor to believe that audit evidence is valid when it is not. And again, they are writing an inherent limitation of an audit over there. The auditor is neither trained as nor expected to be an expert in the authentication of the documents. Right? Auditor is neither trained as nor expected to be an expert in the authentication of the documents. Right? So this sentence is again coming from the inherent limitation of an audit. Next one. Right. An audit is an official investigation into alleged wrongdoing. Is an audit an investigation? No, an audit is not an official investigation. See, we reverse what they say in the question. What does the question say? An audit is an official investigation into alleged wrongdoing. We say no, audit is not an official investigation into alleged wrongdoing. Right? Accordingly, the auditor is not given the specific legal powers such as the power of search which may be necessary for such an investigation. So again, this point that what I put in the bracket over there, they've again picked it up from the inherent limitation of an audit. Earlier question, what did we saw? That auditor is not an expert in the authentication of the documents. But now what we are saying, that as an auditor, you do not have the power of search. And so that is why audit is not an official investigation into the alleged wrongdoing. Accordingly, an auditor is not given specific legal power, such as the power of search, which may be necessary as such for an investigation. Okay, yes, everybody, are you with me? Those who are seeing the class, right? Are you all with me? Yes, wonderful. The matter of difficulty, time or cost involved is in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. Right? So the matter of difficulty, time or cost involved is in itself not a valid basis. So what do we need to write in the answer? No. Just because it will take more time, just because more cost will be involved, will you skip that particular audit procedure? No. The matter of difficulty, time or cost involved is not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. Right, so appropriate planning, right? So just because you say, "Arey, too much time is required to study audit, let us forget it." You can't do that. You say accounts na fatafat ho jata hai, so let me do more of accounts. No, you can't omit studying audit that way. Right, so what does it say? The matter of difficulty, time or cost involved is not in itself a valid basis for the auditor to omit an audit procedure for which there is no alternative. So what to do? Appropriate planning assists in making sufficient time and resources available for the conduct of an audit. Right, so it says plan properly. And appropriate planning assists in making the sufficient time and resources available for the conduct of the audit. Notwithstanding this, the relevance of information and thereby its value tend to diminish over time, and there has to again be a balance to be struck between the reliability of information and its cost. It goes without saying, again this sentence they have picked up from the inherent limitation of an audit. They are just liking the inherent limitations of an audit so much over here. First question also, the nature of financial reporting. It involves a huge amount of judgment. Then auditor not an expert in authentication of document. Auditor does not have a power of search. Then audit, we talk about one more limitation, timeliness of financial reporting and the balance between benefit and cost. Right, so it says the relevance of information and its value tend to diminish over time, and there has to be a balance struck between the reliability of information and its cost. It says auditor, you need to strike a balance between the two. Right, so I hope that after you finish seeing this particular video right now, you're going to in detail, word by word, alphabet by alphabet, going to read the inherent limitations of an audit. And not knowing only the headings, you should know the content also over there. And the inherent limitations of an audit. Okay, right, coming to the next one. Right, there is no relation between audit plan and knowledge of client's business. Array, if we don't have knowledge of client's business, how are we going to prepare an audit plan? Right, so incorrect, right? The auditor should plan his work to enable him to conduct an effective audit in an efficient and timely manner. So auditor should plan his work in such a manner so that he does an effective audit in an efficient, timely manner. And plan should be based on knowledge of the client's business. And a plans should be based on knowledge of the client's business. Okay. Right, next one. Planning is not a discrete phase of an audit, but rather a continual and iterative process. Correct. Planning is not a 1 day, 2 hour job, no. It is a continual and iterative process. Right, so according to SE 300, planning and audit of financial statements, planning is not a discrete phase of an audit, but rather a continual and iterative process that often begins shortly after the completion of the previous audit and continues right up to the completion of the current audit engagement. Okay. Next one, audit documentation is a substitute for the entity's accounting records. No, 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 no. How can documentation be a substitute for the entity's accounting records? Right, so auditor may include copies of the entity's records like specific, significant and specific contracts and agreement as a part of audit documentation. And so minutes of the meeting, rent agreement, copies of this, the auditor may include in his audit documentation. However, it is not a substitute for the entity's accounting records. Right, it's not a substitute. An appropriate time limit within which to complete the assembly of the final audit file is ordinarily not more than what? is ordinarily not more than 60 days after the date of the auditor's report, right, as per SQC 1. Right, the appropriate time limit for the completion of the to complete the assembly of the final audit file is not more than 60 days after the date of the auditor's report. Next one, when the auditor has determined that an assessed RMM, risk of material misstatement at the assertion level, is a significant risk. And the RMM which requires special audit consideration, we refer to it as the significant risk. The auditor should not perform substantive procedures that are specifically responsive to that risk. So now if I know that inventory there is a significant risk, should I not increase the nature, timing and extent of my substantive procedures for inventory? Should the auditor not increase the nature, timing and extent of his audit procedures for inventory? Substantive procedures for inventory, he should specifically respond to that particular significant risk. So it says when the auditor has determined that an assessed RMM at assertion level is a significant risk, the auditor should not perform substantive procedures that are specifically responsive to that risk. Incorrect. When the auditor has determined that an assessed RMM at the assertion level is the significant risk, the auditor shall perform. And so you reverse. The auditor shall perform substantive procedures that are specifically responsive to that risk. When the approach to significant risk consists only of substantive procedures, then those procedures shall include the test of detail. Right? So in substantive it says if you're you're going only for substantive, not for TOC, then that substantive should include the test of details. Okay. And the last one over there. Right, what is the last one? Essays ordinarily refer to inherent risk and control risk separately. No, most of the times we do a combined assessment of the inherent risk and the control risk. The essays do not ordinarily refer to inherent risk and control risk separately, but rather to a combined assessment of the RMM. However, the auditor may make a separate or a combined assessment of inherent and control risk depending on the preferred audit techniques or the methodologies and the practical consideration. The assessment of the RMM may be expressed in quantitative terms such as percentages or in non-quantitative terms. We had seen an MCQ for this one, that RMM may be expressed in quantitative terms as well as the non-quantitative terms. In any case, the need for the auditor to make appropriate risk assessment is more important than the different approaches by which they may be made. So it says doing the proper risk assessment is more important than considering how it has been done. Right, so the need for the auditor to make appropriate risk assessment is more important than the different approaches by which they may be made. Right, so that completes our discussion for the MCQs and the correct and correct in the RTP May 2019. Okay, thank you so much.